Good morning, Paris Blockchain Week. How's everybody doing? Good night last night? Everybody awake?
No.
Well, this is going to be an exciting conversation. As our gracious host here just mentioned, I'm Alan Helm, co-founder here at Bitcoin for Corporations. We are a joint venture amongst Strategy and BTC Inc., focused on advocacy and advisory with a lot of the Bitcoin Treasury companies that are out there besides Strategy. I want to start with quick introductions. We only got about 40 minutes. We've got a 5-person panel here, so tons of great insights, but let's go down the line real quickly. Alexandre, let's start with you.
Hello everyone, Alexandre Lézé, Board Director of Bitcoin Strategy at Capital B, the first and largest Bitcoin Treasury Company listed in Paris.
Hi everyone, my name is Stan. I'm the CEO and co-founder of SATS Terminal. SATS Terminal is a Bitcoin liquidity protocol that powers loans, yield, and trading for enterprises and retail users.
Hello, I'm Eric Larchevêque. I'm the co-founder of Ledger and also the Bitcoin Society, TBSO, which is listed on Euronext Paris.
Hello, I'm Thomas. I look after a group called B2C2, and we provide financial services across the space, of which are partners here on the panel.
Hi, I'm Thomas Vogel. I'm a lawyer. I'm a partner with Latham & Watkins, and I co-chair the digital asset practice.
Thank you, gentlemen. So I want to get a gut check here from the crowd here real quick. Show of hands. How many of you were looking at Bitcoin Treasury Company stock last summer, peak mania? Be honest. Let me see them. Not a whole lot here. Okay. It's going to be even less with this next question. How many of you currently hold equity or preferred security issued by a Bitcoin Treasury Company? Got 2, 3, 4, 5, maybe 5 hands in here. Okay, so we've got a lot of education to catch people up on. A year ago, the Bitcoin Treasury model was really being hailed as an infinite money glitch for some of these public companies. It was really amazing to see the amount of capital that was raised through these PIPE and ATM equity programs, especially stateside. But now, Bitcoin is down to 74K, about 41% from its all-time high. Some companies are starting to sell the Bitcoin that they had on their balance sheet. Others are not acquiring. And that has had some people to say that maybe the model has failed. So I want to get a quick gut check from everybody up here on stage. Is the model broken? Are we experiencing a stress test? Are things evolving? Alexandre, let's start with you.
The model of a Bitcoin Treasury Company has never been stronger. Strategy today, as of we speak, is buying $1 billion of Bitcoin every day. And this is something that we thought would happen 4 years down the line. And it's happening today. But let's take a bit more distance and look at where everything starts. There are 21 million units of Bitcoin, fixed supply, and an unlimited monetary supply. And in that context, Bitcoin is completely outperforming over the last 10 years all other asset classes. It's 60%, 70% annual growth. That's 2x the Magnificent Seven. That's 4x gold and the S&P 500. And only one set of companies in the world is able to systematically, structurally outperform Bitcoin over the long run. And that is Bitcoin Treasury companies. But to your point, not all of them. The ones that are focused on the long-term accumulation of Bitcoin in a way that increases Bitcoin per share over time. And if you don't have that clarity, if you don't have that consistency, and if you don't have the depth of capital markets expertise and the liquidity and the institutionalization, it's harder. But when you compare the performance of Strategy, of Metaplanet, of Capital B, the leading Bitcoin treasury companies in each continent, well, all of them are outperforming Bitcoin by orders of magnitude in the bull market, 1,000 to 3,000 to 9,000%. And in the bear market, since the launch of our strategy, we are up 400%. And Bitcoin is flat. So Bitcoin price has not really moved. And we have accumulated from 40 Bitcoin to 2,900 Bitcoin. We have accumulated 700 BTC in the bear market. I would not call that a broken model.
I'll say that companies that had no real business, no money, no means to raise capital, they're dying, and it's not breakdown, it's just a shakeout. Well, I agree that Michael Saylor is still buying no matter what's the price, and I think that's pretty much the difference between conviction and just chasing short-term narratives, short-term gains.
Well, I will just add that basically the Bitcoin strategy model is inevitable. The world is going to, in a way, a catastrophic failure from all point of view, economical, from the geopolitical, monetary aspect. So at the end, owning Bitcoin is going to make the difference for you as a physical person, but also as a company. So it's only about long term. And I think that's the two most important words for Bitcoin. It's long term. And so, yeah, the model is not broken. I agree with Alexandre. It's also very technical, a Bitcoin Treasury Company. So it's not just about buying Bitcoin. It's about mastering capital markets operations. So be aware of that. But otherwise, Bitcoin is the solution. Yeah.
From what we see, I think the point was well made that it's not necessarily the model that's challenged, is who is actually competent in the space that is showing up. And we've seen, we talk about the successful one, MicroStrategy, for example, Capital B, so on and so forth. But I don't know the exact number, but I would say there's more than 200 treasury companies listed around the world, and they're not meeting the same level of success. One, because they can't raise capital. They don't actually have access to the market as they were expecting, so they basically have nothing to do. They don't have the rigor on the other side to manage their own treasury, and some of them have had to stop business. The second piece is, and I think you've made a great comment, which is the Bitcoin per share, which I would assume is your objective is to maximize the amount of Bitcoin per share, and this is the definition of success, whereas most of the treasury companies' success is measured by their stock price to NAV. And that metric in itself is what seems to be defining the success of a company. But I guess it's wrong, and I hope that we'll hear from the other panelists what's the real objective of a treasury company by opposition to what people look at. The only question is, what if MicroStrategy stock price goes under the NAV? Will they be forced to sell, so on and so forth? So that's the stress test condition. But I think I hope that the panelists today will be able to set things straight on what the objectives are, and therefore we'll be able to recontextualize, is this model successful or not?
Yeah, well, I mean, a lot of the main points have been made, but I mean, clearly the model is not broken. That's a stress test that we're going through right now, and this is how it's supposed to be, right? This is when you buy equity of a Bitcoin Treasury Company. Yes, you're buying leverage exposure on BTC. You're buying amplified Bitcoin for the future, but you're buying the skill set of the management. And all Bitcoin Treasury Company are not born equal. Managements are different. There is a due diligence exercise that you need to do as an equity holder, and that's completely key. The other thing is, you know, if your strategy or if you're Capital B, you operate in different markets. This puts constraint on the type of product that you issue. I mean, when you issue convertibles in the US, the constraints are not the same than when you issue them out of a French balance sheet or a balance sheet in Europe. The same thing for perpetual equity. And so, you know, this is not as simple as just buying a proxy. You're buying something else, and that something else is essentially credit risk on the management.
Thomas, I want to throw this question right back to you. As you do sit in a lot of the boards with these companies that are looking to put Bitcoin on the balance sheet. And I think a lot of great points were just made up here on stage that simply the act of putting Bitcoin on the balance sheet isn't enough to constitute you as a Bitcoin Treasury company. With that said, you know, when you are speaking to a board now, many of them are skeptical. You know, what does that conversation look like? How have things evolved since the last year?
Well, I mean, things have changed completely, right? First, if you're a company and you want to put Bitcoin on your balance sheet, just to be clear, you're not turning yourself into a Bitcoin treasury company. You're turning yourself into a company that puts Bitcoin on the balance sheet as a treasury asset. So it's slightly nuanced. But a few years ago, I mean, essentially, you had to, if you walked into a room, and I've been in that situation, and you have to address that topic, you first have to prove that you're not crazy. This was kind of the first test: is why are we even talking about this? Now, Bitcoin is no longer a fringe asset, because people know about the ETFs, they know, they understand that there are Bitcoin treasury companies. This is more of an accepted model. Now the discussion is really about how is this going to impact my balance sheet? How do I mark the volatility? What's the accounting treatment? How do I sell this to my compliance? How do I hold it? What's the regulatory treatment? I mean, there are answers to all those questions, but as opposed, those are very different questions that essentially proving that you're not raising a point that is going to endanger the future of the company or that is completely irrelevant for purposes of a board discussion. And so now I think the easier way to say it is that you had the privilege of ignoring it 3 or 4 years ago. Now you can still ignore it, but it's a choice. If you ignore it, if you set it aside, you have to consider it first.
Alexander, back to you. So a lot has changed in the last year as well as far as raising money, right? Originally, the big method of doing it was the ATM programs, the pipes. Then that transitioned into common stock being leveraged for BTC exposure. Then we moved into the convertibles, now the preferreds. Walk me through kind of who has showed up at each stage from an investor perspective, and what has the arrival of maybe some of these fixed instruments like Stretch have done to bring in new investors?
First of all, I would like to make a point. With the advent of artificial intelligence, we can discover that intelligence can be relatively abundant. Courage is not. And I would like to say that the 200 companies that have put Bitcoin on the balance sheet have put in the courage. And they will succeed and they will outperform every other company on their stock market over time, even if they are not a pure play Bitcoin treasury company. You know why? Because they have associated themselves with the strongest asset on earth, and it's working for them 24/7. Time is now working for those companies. You cannot measure the success of a courageous decision after 6 months, after 1 year, after 4 years. Let's meet back in 10 years and look at those companies that have 200 Bitcoin, 1,000 Bitcoin. In 10 years, they will have hundreds of millions of dollars of capital. You know why? Because dollars will be worthless. They depreciate at 7% per year, and the only way to keep up is to put part of your profitability as an operating business in Bitcoin. And yes, in the bear market, the stock price of those companies can suffer. But still, Bitcoin is growing at 30 to 60% per year, and I don't know many businesses that can have that type of performance. And if you have that type of performance, that you better put your profitability in the Bitcoin. Then if you want to amplify that potential and actually be on the edge of the future of capital markets and actually build digital capital markets and benefit from it, you know that the digital version of products is better than the traditional version of products. Digital capital is better than traditional capital. And digital credit is better than traditional credit. In fact, it's not even comparable. If you want to go out of this panel and remember one thing, it's called STRC. This is going to redefine how capital markets function, how risk is calculated, how performance is appreciated. If you don't generate more than 11.5% per year with less than 2% volatility, you have no use case as a credit instrument. Because Stretch is exactly that. It's the equivalent economically, not legally, but economically, it's the equivalent of a monetary fund that yields more than 10%. Who can have that? Everybody. It's in the stock market, It's issued by Strategy. Strategy last week bought like 10,000 Bitcoin with this. This week, in like 2 days, they bought 14,000 Bitcoin with this. This is completely changing the structure of the market. There will not be enough whole Bitcoins for everybody. There is 21 million Bitcoins, 100 million millionaires. One thing will move the needle, it's the price. Everybody will fight for it. And Strategy is accumulating all of it, and the companies that are able to access capital markets now will be the winners in this century.
And if I may, I'll add to your point, Alexander, it's the fact that, which trickles back to your question, the type of investor that are looking at equity instrument, the type of investors that are looking at convertibles, the type of investors that are looking at perpetual preferred equity, they're all different and complementary, right? And this is very important because originally people who were buying the equity were essentially buying the story of the leverage BTC bet. People who were buying the convertible, they were essentially funds, volatility fund or arbitrage fund trying to play the arbitrage between going long on the instrument and short on the equity. I mean, there's an entire business of this. So essentially what Saylor was doing and what Capital B is doing is monetizing the volatility for fund audience. But with Stretch and essentially wrapping around a credit product around Bitcoin, and I'm using this term loosely because it's actually equity, you are actually looking at insurance company, you're looking at pension funds, you're looking at more traditional players who actually are very happy with getting 10% because it's 8 or 6% more than whatever else they can get on the market, and not getting the full amplified Bitcoin. So everyone's happy because they're getting 10%, and then, if Bitcoin performs 30% a year, as Saylor says, well, the leftovers go to the equity holder and the Satoshi per share goes up. So if this works, and I think this is your point, Alexander, I completely agree with this, this is going to completely revolutionize not only the fixed income market, but put massive buy pressure on BTC because everyone's going to start doing this on an asset that is limited in supply. So, take a view as to what this is going to do to the price.
Eric, I'd love to get your take here as well, just through the Bitcoin Society and the focus on entrepreneurship. What does this mean for your average C-suite individual?
Well, we built our company on the values of Bitcoin. That's why it's the Bitcoin Society. And what are the main values of Bitcoin? It's freedom, of course, resilience. I think resilience is going to be the keywords of the next years because of what's going to happen into the world. I told about it. Also, artificial intelligence is going to impact our lives, so we need to take things into our own hands. And one of the last values of Bitcoin also is like sovereignty and personal responsibility. And this is what we are trying to do with TBSO, is to bring all the tools for individuals to raise their personal responsibility, to help them to build their companies, to develop their companies, their own business, also to understand how to build their own investments, to be more resilient. So we talk about financial education. It's about transmission. And everything is set and based on the values of Bitcoin, which also is about the long term. We spoke already about it. And I think it's very important right now to have a Bitcoin strategy, to understand it. And the wrong bet will be to ignore it, as you said. And it's true that I see more and more entrepreneurs who are asking me, how do I buy Bitcoin for my company, for my holding? It's moving, in the right direction. A few years ago, as you said, everyone was thinking that it was completely crazy. But now the mindset is shifting, and that's very encouraging for the future.
Well, and there's a whole lot of questions that come with that as well, too, especially on, custodian side, spot trading, being able to lend. Thomas, I'd love to hear, your take on things as, companies start to ramp up and issue their own preferreds. I mean, liquidity is drying up for actual Bitcoin that you can put on the balance sheet. What is your take on all this?
You mean on the type of product versus market conditions? Well, I mean, again, this goes back to the point as you're buying the credit of the management team and their ability to deliver the right product at the right time. I mean, this is completely key, right? If you're issuing equity when MNAV is negative in market conditions that are stressed, you're going to dilute values, right? I mean, your shareholders are going to be very unhappy. If you're issuing preferred equity at a very high interest or dividend rate, this is also going to make people unhappy. So, look, there is no right or wrong answer, only time tells, but what is right is you have to have a panel of products that is large enough so that you have what works in your toolbox at the right time. Now, obviously, you're constrained by the market you're in, right? I mean, that's just a fact of life. If you have no derivative market in your local market, you're not going to be issuing convertibles because you're going to have no funds buying this because there is no liquidity, no depth in the market to be able to trade derivative on the back of it. If you can't trade derivative, you can't place your convertible. People don't buy it for that reason, right? They buy it to trade the volatility. So all I can say is that one of the first criteria for a Bitcoin Treasury Company is access to the capital markets, its knowledge of the product, and its resilience when things go bad, and being able to convince their shareholders that everything's going to be fine because there is no big black swan on the balance sheet.
So there's this, we talk a lot about capital market, and then there's also, so that's how you raise money. From our side, we ask ourselves the question, what's the default risk of a treasury company if it exists? So the way you finance yourself is very key. You need long-term duration. You need to borrow money for as long as possible. You don't want a downturn to be an issue. If you go back to December this year, the question was, what's the price of Bitcoin when MicroStrategy gets in trouble? Nobody really knows. It's not an easy number to calculate, but that was the chatter in the market. And actually, the response was, you know what I'm going to do? I'm going to set aside $2 billion in US dollars to pay dividend for years, so I will never, ever have to sell it. That was the response. But it talks to the structure of capital you need to put in place. It needs to be such that you can warehouse any volatility in the market, and there will be. So yes, access to capital matters, but it's not random capital. You need sustainable capital, otherwise you will be subject to downturns in the market as we're seeing right now. And then we'll also see the other side of the equation is wonderful. You accumulate a lot of bitcoins. This is the whole objective, and there is what you do with it. This is also a way to structure efficient buying if your objective is to maximize the number of Bitcoin per shares. And we see more and more sophisticated companies which will put derivative structure to be able to profit from the downturn, buy cheaper Bitcoin, that will leverage their holdings to borrow ours to actually buy more assets. So it's both sides of the equation. You have the public market, but you also have an asset that you can use to raise capital on the other side. So the number of tools you have at your disposal to raise capital is growing, is being adopted, and I think the most sophisticated companies will benefit.
Yeah, and the answer from strategy to your point was also to say, well, I'm going to use perpetual capital structures, i.e., I'm paying you a dividend of 10%, but I'm never reimbursing you the capital. And you're making 10% a year, which in addition in the US has a very advantageous tax treatment, right? Because the dividends you're getting paid if you're a US resident gets amortized against the value of the equity. So, I mean, essentially on a real term basis, you're not getting paid 10%, you're getting paid 18%. Right. I mean, this is until your asset amortizes. So the benefits are considerable, right? You don't have to pay back the capital, so you're not subject to margin calls. You're not subject to anything that will get you into trouble, to any triggers, and at the same time, you have capital that you don't need to reimburse. It's quite interesting.
Stan, I want to get your take here as well, just from the lending side and with SATS Terminal. I see you have some thoughts.
Well, yeah, I think on SATS Terminal, we are not a treasury company. We're a startup. We're building a Bitcoin protocol, and we actually make all our revenue in Bitcoin. So for us, it is pretty important because we accumulate a lot of Bitcoin we never sell, and we want to use that Bitcoin to make it work. So the best thing is to get a loan and then use those stable coins to actually generate yield and cover some portion of our operational expenses. And that's what we are doing at SATS Terminal. We're using our own cross-chain Bitcoin borrow aggregator, where we have all of the major protocols like Morpho, Aave, Camino, etc. We abstract bridging and wrapping, make it very easy for any user to go and take the loan. And yeah, well, I think we need to do our best to orange pill more and more people. That's what we are doing at SATS.
Love that. So we've got about 10 minutes here. I got 2 more questions that I want to get through. So let's try to make these answers as quick and succinct as possible. A lot of what we talked about, is really focused on the U.S. markets, right? And that doesn't necessarily replicate one-to-one here in Europe. Alexander, I want to start with you. Really being Europe's first true Bitcoin Treasury company. What does the infrastructure, or like what are the differences that you're seeing in terms of being able to stand up, a Structure-like product here? What are the limitations, and what can a European company do to replicate something closer to strategy?
Not every stock market, capital market is created equal. You have really a very short list of capital markets that are liquid, institutional, with a lot of individual investor participations. And in that way, the US is the number 1. Europe is actually number 2 as a whole, and Japan is number 3. And within Europe, France is number 1. 40% of the credit markets in Europe is France. And the most active liquid market with individual investor participation is France. And the most advanced, forward-looking innovator, regulator is the French one. And so France has a lot of capacity to lead the formation of digital capital markets for Europe. And it's no coincidence that Capital B is listed in France. And another advantage is definitely that we have a proximity and a lot of facility to access Luxembourg as well. And we have a dedicated SPV in Luxembourg where we can issue Bitcoin-denominated convertible notes that are long-term as well, 5 years, and that can provide the ability for the company to increase the size of its balance sheet in orders of magnitude at specific times. And that is really a key advantage that we have in Europe with the different markets for private structures and with a very strong capital market in France. Something else we have in France that's quite important is a lot of tokenization innovation happening here. And I guess some of you in the room are working on tokenization and digital capital markets adoption. And just before I said one thing is that you have to remember, that you probably want to remember leaving this room, is STRC. Well, even better is tokenized STRC. And that's already happening. It's already hundreds of millions of dollars, and it's 24/7, 365. That's being wrapped into the decentralized ecosystems, and it's also redefining what yield means in DeFi. Any yield below 12% in DeFi is worthless now. Nobody cares. They can get STRC, and it's backed by Bitcoin. So we are witnessing the junction between Bitcoin as the capital reserve asset of the world in the digital era and all of the technologies that emerge in the crypto market and as well in Bitcoin natively with Liquid, for example, where our stock is tokenized out of Luxembourg with Stocker. And you see that we are going straight to 24/7, 365 markets, and that the best stocks, the best credit instruments will be backed by Bitcoin and distributed by tokenization in a regulated manner. And Europe really has a big opportunity there. We now have the first stock market in a tokenized format with Liz. This is going to accelerate at a pace that is not really anticipated. And again, the first players that will be able to take advantage of Bitcoin, the capital assets, and digital technologies for the distribution and the amplification of Bitcoin will win.
So we're coming down to 5 minutes. I want to close up with last thoughts here. We're at the bottom of the bear market. We're at massive geopolitical conflict throughout the world. But Bitcoin, what I'm hearing here, is hope for a lot of the companies that might have some distressed assets or not. By the time we're sitting on stage here again next year, where are we at? Where do you see things playing out? Stan, let's start with you and then go down.
I think the next 12 months will be tough. It looks like the campaign in Iran is not going really well. I think that would fuel oil prices to go up. That will also fuel Russia aggression in Europe. But I think despite all of that and terrible things happening, Bitcoin still remains one of the most trusted assets and actually something that can help you to go through all of these hardships that would happen in the next 12 months. And I think that all you can do is buy Bitcoin as a company, put it on balance sheet as an individual, because if you will not be doing that right now, long term you would only lose.
Well, in a perfect world, Bitcoin wouldn't have any utility, And unfortunately, I think we are not going towards a perfect world. I think we are going towards a very difficult world at many levels. And so more and more people will understand why Bitcoin exists and will get interest into Bitcoin. And so I think in 1 year, while it's very hard to make some predictions, I did predictions before, so I will stop doing them. But one thing is for sure, I think we will be in a worse place than right now. And this will put Bitcoin more into the center of the stage.
I say for myself, I'll distinguish the asset class. And here, of course, we'll be subject to macro environments, and there's nothing we can do about it. I will underline the resilience of the asset class. Not so long ago, people were wondering if this thing is going to go to $10,000 yet again. It hasn't. It's been sustained, supported, notably institutional flows have supported the price. The shocks are always absorbed. Actually, I think S&P made new highs yesterday, despite everything we're just saying here. So there is resilience of capital markets, of which Bitcoin is becoming an institutional asset class. So I think it should and will see the same resilience. But I also think we're underestimating what's happening in the broader institutional world and the adoption of the technology, and therefore the ability to trade assets on-chain 24/7, distribute them, and general capital markets moving in that direction. And that will happen with or without the macro environment changing. It is within the control. We're seeing the investment. We see the names. I'm sure plenty of panels covered that topic. So it's just not just an asset class. It's a technology adoption, and that will support the price of the asset class, and not just the fact that it's limited supply.
Yeah, look, I agree with all this. I'm not going to repeat it. The one thing I'll say is, one thing that keeps me up at night is essentially a black swan event that no one controls, and that could impact not only the price but also the perception of Bitcoin. And when I say black swan event, I mean a big platform going down or some big fraud, FTX-like. And the issue with that is that it sort of puts a dark cloud over the name of Bitcoin, pushes that dark cloud over the space. People come out of it, the space comes out of it, but we don't want that delay because we're on the flywheel now, and we should just push ahead.
Alexander closes out with the flip side. Bitcoin is hope.
Exactly. I would say that in some way, imperfection can be seen as a defect or can be seen as an opportunity. As an opportunity for everyone in its life to upgrade the world and make it better in some way. And the good thing is all financial institutions in the world have decided to upgrade the world with a better capital asset. BlackRock, Fidelity, Franklin Templeton, and I cannot even go through the whole list. It's all the systemic financial institutions are opening the gates to Bitcoin. In France, it's the same, Crédit Agricole, Société Générale, BPCE, and so on. Everybody is working on opening access to Bitcoin, and as an individual, you can really have that opportunity to bring Bitcoin to your life and to work with Bitcoin with an asset that generates 30 to 60% performance annualized over time. Yes, there is volatility, but over time, that is the most powerful thing that you can do for you, for your family, and for your company, and for the society and the world. And I think Bitcoin brings hope. I think the Black Swan event can happen, but Bitcoin has survived Mt. Gox, FTX, and threats of governments everywhere. China wanted to ban it, and they buy it, and everybody is buying it. It's the only thing that the United States, Russia, Iran, Ukraine, North Korea, the United Arab Emirates, Luxembourg, Norway, Switzerland, El Salvador agree upon. It's literally the best asset on earth, and if you can have that opportunity right now to buy an asset with a 60% discount, I think it's a great opportunity. And when it's up 100, 200%, it will still be a good opportunity because it's going to be the global reserve of the world, and you better own some share of it.
There's nothing else that needs to be said there. Gentlemen, thank you very much for the time. Paris Blockchain Week, it's always been a pleasure.